Hello and welcome to the market update video with me, David Madden. Jerome Powell, the head of the Federal Reserve, is in focus today as Mr. Powell will deliver a speech at the Jackson Hole Symposium. Traders will be focused on one thing: how hawkish will Mr. Powell be? Will Jerome Powell give off the impression the Federal Reserve are looking to do yet another 75 basis points interest rate hike in September, or will the language that Mr. Powell uses be a bit less hawkish and give off the impression the Federal Reserve are looking to scale things back and only hike interest rates by 50 basis points? Stock markets in Europe are in the red and US index futures are pointing to a lower start. A few hours ago, the US dollar index was firmly in positive territory, but it's come under selling pressure in the last few hours. Despite the weakness in the US dollar, gold and silver continue to remain in the red, whereas WTI and Brent crude are both up over 1%.
This week, the US 500 has been trending lower as traders are fearful that Jerome Powell might deliver a hawkish speech at today's Jackson Hole Symposium. Looking at the MACD indicator, we can see there's been a clear decline in positive momentum, suggesting the bulls are no longer as influential as they once were. While the US 500 continues to hold below these two simple moving averages, it's likely the more medium-term bearish trend will continue. Further losses from here could see a target of 41.66, and a break below that could see a target of 41.46. Even though the more medium-term trend for the US 500 is lower, it's worth noting the shorter-term trend for the market is higher. If the US 500 can manage to hold above this zone here at 41.46, that could be an early indication that the shorter-term upward trend will continue. If we do see a rally in the US 500 from here, it might encounter resistance at 42.00, and a break beyond that could see a target of 42.09.
The British pound is in focus today as a UK energy regulator warned energy bills in Britain might jump by 80% come October, and this is fueling the cost of living crisis that's been across British headlines recently.